Students, welcome to New York City, specifically Manhattan, which is the skinny section that houses Central Park, all these beautiful restaurants, tall buildings, and of course, on the south side, Wall Street. That's the financial district, where people are always buying and selling stocks. So you've probably heard of the phrase stock market. You're thinking, what is that? What is a stock? Well, stock, although it may seem out there with all these numbers and growth and loss patterns, it's actually quite a simple concept. When you buy a stock, you have an ownership share in a business. So think about your favorite phone company, your fast food restaurant, or your favorite cereal. If you look, almost all of those items are publicly traded companies. So you can actually go online and put an order in to buy one stock of that company. And when you own stock or a share of that company, you're a part owner. If the business does well, that share appreciates in value. If that company does poorly and goes bankrupt, you lose everything. So we're kind of hoping that the former happens. But any way you look at it, stocks and the stock market is incredibly important for our economy. So being here on Wall Street just helps me appreciate that, stocks are really important for us. So let's go and check it out, go back to the classroom, fly back to the classroom from New York City. See you soon. Hey students, welcome back from Wall Street, where we were talking about stocks. Now, another way to think about stock, if you own stock, you're actually an owner of the company. You don't own all of it, but you own a piece of it. Another way to think about stock, or another way to refer to it, is equity, or an ownership stake, or a share. If you hear any of those terms, they're all synonyms. If I own shares in a company, stock in a company, or if I own an ownership stake in a company, those are all synonyms. Now the prices. How do you determine the price? Well, price of a stock is based on the market perception of the business. Sometimes it's not how well a business is doing currently, it's how well people think they're doing now and how well they're going to do in the future. Prices change dramatically, sometimes up to 10 or 20% in a single day. So trading stock in the short term will give you a lot of anxiety because that market perception can change with the snap of a finger. So whenever you go to buy stock, think about doing so in a diversified way where you own lots of different types of companies and you have a long-term view. Because if you're just there to make a quick buck one day to the next, that's really, really hard to do, and you're more likely to lose money than to gain money. Now, trading stock is not free. You typically have to pay somebody to do it on your behalf, and that commission is about $8, depending on who you ask to do it. And then at the end of trading the stock, after you buy and sell it, you want to know how much money you made at the end. We call that the rate of return, and it's calculated as a percentage. So let's take a look at an example so we can calculate that rate of return. I buy 10 shares. So 10 shares or stocks of Hypersonic, my favorite transportation company that goes really fast, for $40 per share and an $8 commission. What is the rate of return if I sell them 3 months later for $500? All right, well, let's just do the math here. If I have 10 shares and they're $40 each, 10 times 40 is 400. So it cost me $400, but I also had to pay $8 in commission, so it's $408 total dollars. So over here, I can say that my total cost is $408. But what is my profit or loss? Well, I spent $408, but I made $500. So this was actually a profitable transaction for me. So the difference between 408 and 500 is 92. How do I know that? Well, 400 and 500, there's a difference of 100, but I have to factor in that $8 commission, which reduces the 100 to 92. So I have a profit of $92. I spent $408. So what is my profit or loss? We're going to calculate this as a percentage, and we're going to do this on a calculator, though you can do this using the standard algorithm if you so please. Okay, so 92 divided by 408. Okay, so that's 22.5%. Right, so my rate of return here is 22.5%. And for over 3 months, that is not too shabby. That was a really good trade. Now in 3 months, that's a little bit too short of a time frame. I typically would hold things longer than that, like for years and years and years, if you really believed in hypersonic. So just be wary that trading stocks sounds like a really attractive, high-paced, exciting opportunity. But if you're trading over short increments of time, you could find yourself losing money rather than gaining money. Thanks for learning about stocks. Have a great day.